Welcome to the updated pattern section of the RDTS trading system. This video will be an introduction to patterns. First, we'll define how to think about patterns, and then we'll go into charts and cover some examples. I'll focus on keeping these videos under 20 minutes because we'll be covering quite a few patterns. I'm also going to add to the members section a virtual scrapbook of patterns and, more importantly, how to trade them. So definitely stay tuned for that. I'm really excited about adding that. Before we jump in, let's make sure we're on the same page. The power of the RDTS system is that it tells you where on a chart to look for reactions. We trade around reactions. Since we know where to look, we then look for patterns. We have rules that these patterns should follow. Now, what is a pattern? In the most simple form, it's price action that we see time and time again. With a pattern, we are predicting. I don't care what you heard from anywhere else. The system we trade reverse engineers momentum and tells us where to look on a chart for trades. Now, in real time, as a pattern is developing, we are asking two questions. What should happen and what shouldn't happen? You'll discover with the examples how simple this really is. Now, one final thing. You trade a very powerful system with the 4-chart setup. It's powerful because not only does it show you where to look for trades, but it also combines time and tick charts. You'll discover as we further get into the training just how powerful this is, but here's what I want you to keep in the back of your mind. Every pattern you see or that you find cascades through all 4 charts. I'm intentionally not starting you on the 4-chart setup because here's what I need from you. As we go through these simple examples, I want you to be one step ahead of me. I want you to be visualizing either in your head or if you have to in a 4-chart setup, how these patterns unfold. Doing this will ensure you grow as a trader and you aren't just watching what I'm doing here, but you're making the system your own. Don't worry though. We'll get to breaking down these patterns in a 4-chart setup. I'm just trying to advance you as a trader in the most effective way possible. All right, let's start with the first example. So the first simple pattern we'll cover is really a 2-bar pattern, but there's a lot more to it because once again, you're talking about the story of the chart and you're talking about the context. Context matters. So when you're looking at patterns, you're looking at the story of the chart and you're keeping that in mind as you're looking to see, okay, what pattern is unfolding. So there's a weak breakdown, there's a strong breakdown we'll cover as well. There's a weak breakup and a strong breakup. Here we're going to cover the weak breakdown. Now, the weak breakdown, I've identified 2 areas. This is something that you see common as a pattern. And typically, it's long momentum. So you'll see something like this. Let's go on the first one that I've identified here. What you typically see in this pattern is that there is a successive move of green candles. I would consider this red candle green, even though it's red, just because how it closed kind of in between this and in a momentum and a bias long momentum environment. But you have a series of green candles. And anytime that you have at least 6 or 7 candles, that's usually above the norm. And the other thing that you have here is it's extended from the reaction areas. So this isn't extended that far, but it is extended from the actual M24, the RDA, and the M9. So it's pretty extended, or somewhat extended. Now we do have the weekly open here, so this is another context that you would add. So that's kind of the first part of this actual pattern. The next part of this pattern is that why it's weak, why I call this a weak breakdown, is because what happens next. What happens next is that this red candle, so it creates a level. So the one thing I don't have in here that I should have in here is it typically, not typically, it creates a strong level. So it creates a strong level. So this is a strong level right here. So it creates a strong level. So you have to wait for the close, obviously. And the one thing that candle does typically is that the low of this red candle will test the previous candle's open and usually sometimes the previous candle low. But at a minimum, it tests the previous candle open. And then what it does is it closes around or above 50% of the previous candle. And that's what we see here. So we see this pattern here. Now we have another thing here that you should be shouting, which is, okay, it reacted at the weekly open, we expect that. Once again, we're looking at the 60-minute chart. We would be cascading this over to other charts. But we just want to get the basics and the concepts of these patterns, because once again, these patterns work out in every time frame. Let's go to just the other example of this. Like I said, this is another example of the week breakdown candle. What do we see? We see the same type of thing. We see a bias right here. This candle, this pay attention candle here, broke through bias and changed momentum. What do we also see? We see then it kind of ranges, and then it has a successive move. We have one expansive candle here, and then it's starting to slow down. And then what does it do? It creates a strong level. Now this pattern is a little bit different because it actually has a rejection high. That's the only real difference there, but it does create a strong level. But what is this? What happens thereafter? The low of this red candle breaks the close, and then it closes at or around, usually it's at or around, usually it's not in the 75%, but it's at or around the 50% level. Now I'm going to add something here, and this is important to patterns, because when you're early in a pattern and you're identifying that pattern, you're trying to say, okay, what should happen, what shouldn't happen. You want to identify the two most important levels that matter for that pattern to unfold in the way that you expect. So remember, this is a week breakdown, so we expect a breakdown in price. We would expect maybe a test of at least one of the momentum indicators, at least a pullback. So I'm going to remove the weekly open, high, low, and close here just because it adds a little complexity, or not complexity, just adds a little bit of noise to the chart. The only two levels after this close here, the only two levels that matter is obviously the top level here, and then this level right here of the actual close of the previous candle. For this pattern to work out, and we'll go over other patterns that fit this model that don't work out, that have another pattern. I keep saying that. I'm not going to say that anymore, because just assume I'm going to go through as many patterns as I can possibly think of in this series. And then I'm going to work on getting them documented in an image form and explaining them fully. And then we'll talk about how you trade them in a 4-chart setup. So when you're looking at this pattern, and let's just go back. I don't really want to do a lot of replays, but I'm going to just do this replay just now. At this point in time of the chart, the only two levels that you really care about, that you're looking from a 60-minute golden time frame on whether or not this week breakdown pattern is going to play out, is the level above, the strong level, and what would be considered kind of a weak level. That's the only thing you care about. And then you're looking for clues within the other charts, and you have a trade system around that, with the expectation that it's gonna sell off. I mean, this is right around 4 o'clock, so this is right at closing on a Tuesday. So obviously, when the market opens back up, then you would be trading the overnight session, and then you would be trading probably low volatility, low test up. You'd be waiting a couple hours for it to come down and test down here, and that's what we know that unfolds. But that's what the only two levels that you really need to pay attention to for whether or not that pattern is going to play out over a longer term trade, which we're on the 60-minute, is this level here. How does price react there? And then how does price react here? Of course, when the next candle opens, you're going to look for clues of what's happening. And then you're going to go to the chart 2. You're going to go to chart 4. You're going to look at the 5-minute chart. You're going to look at chart 1. Of course, you're going to look at that. And we'll cover that in much more detail in this section. But I just want you to understand that at this point in time, this is the power of having this scrapbook of patterns in your mind, or if you need to create them and start naming them so that you can trade around them. This is the power of it, is that when you identify these patterns, you have 10 or 15 maybe on the 60-minute that then trail down to 1 to 5 on lower time frames that you trade. That's really the way it works. So that's the week breakdown pattern. The next pattern we'll cover is what I call the RDA bias check pattern. And this is a simple pattern. We talk about this often. What I'm going to do in these videos, I'm going to go probably from a complex pattern to a really simple pattern. This pattern, you'll see time and time again, and you'll see it around momentum checks, but right now we're just going to focus on the RDA bias check. And you see this time and time again. It almost surprising how much you see this around the RDA on multiple charts. But in this scenario, so here's the outline of it, is we're in a momentum long environment, so in a bias long. So it's coming from, price is coming from an extended area, and it's checking the RDA. Now, what typically happens on this is that there's an overshoot of the RDA, and if I go in here a little bit more, there's an overshoot of the RDA, and then there's and usually it's this 2 candle pattern like you see here. And what it does, or what's important about this, is that it has typically the rejections around the same area within a kind of standard deviation. And then it creates a level, a closed level, that sometimes is strong, sometimes it's weak. In this case, it'd be kind of a strong level because it is below this range. It creates a level above the RDA. That's really this pattern. It's a simple pattern. You see it time and time again. And you can see here, it creates a level. The second one here, this one's a little bit different. I mean, this is obviously, it's during the open. So it's 8 o'clock, big volatility within the open. And then what does it do? It overshoots. We don't see a successive, the successive candle. The candle after it doesn't have the low below the RDA, but it does fit this model because what does it do? It creates a strong level. The next one, we look at the next one, same type of thing. It's coming from not as a well extended area as over here, and over here. This one's coming from, when this one unfolded, this would have been a big move. It would have been pretty far extended from the RDA, and you would This move here, you wouldn't see this price action, obviously. But this one here, you're coming from about that same area. It maybe looks like a double top area. We do have a strong level that developed here. So we have a strong level, so we'd be factoring that in. We do have, what do we also have? This is not, this I don't qualify as a weak breakdown, mainly because of the close creates a level. So this is another pattern that we'll cover, where basically it's a breakdown or break up, and then it creates 2 levels. But it's kind of the same thing as a weak breakdown, because you have the 2 levels that are really important, except here with the close of this red candle, it makes this lower level more important, just because it closed there. But what happens here is that we see the same type of thing. We see overextension of the RDA. The green candle does that as well. And what does it do? It creates a level. Now I want to add a little bit of complexity here, just because that's the way trading is. We're on the 5-minute chart now on the NQ, and we have a 5-minute RDA check here. And when you drop down to a lower time frame, you do typically sometimes get noise. You get more noise, and you have to sometimes wait for a couple more candles for things to play out or to actually unfold. But if we see here, we have the same type of thing. We have an RDA check, and the rules are kind of the same. What you're really looking at is you're looking at, okay, is it coming from an area? Typically, it's a strong level. So you have a strong level here that was created on a 5-minute chart. You do have a switch of momentum, and it does look like it's going to go for a bias check. And you do expect a little bit of an overshoot, but then you're looking for levels. And what is created there in these 3 successive candles, you do have a close below, and then you have a little close below, and then you have a kind of an answer right here. And then you have a level that you mark as important. When you look at this type of scenario, if we were to unfold the chart here and just go to here, what are your most important levels? Well, you probably would be saying, okay, well, right now at this close, the most important level, especially if you want to execute this trade, is here and here. But I would say if you're on the 4-chart setup, and this is where I'm handicapping you a little bit, the 4-chart setup, we would have a lot more information. This would be actually the level. if you're looking to execute this trade. And what are you looking to execute? You're looking to execute you might already be in this trade because you would be maybe already shooting for, okay, it's going to overshoot the RDA, and then I'm expecting it. But then you would be watching this lower level very carefully. But it fits a pattern. It still fits a pattern. And the pattern is that we unfold it. It doesn't break this level, closes above the RDA, does have an overshoot. Here's the thing about the pattern too. The longer, what shouldn't happen? It shouldn't close below this level. It can maybe test it, but it better, on the small tick chart 2, it better really reject it quick. And it's probably a level on the small tick chart. This is, like I said, I'm hindering us because we don't have the 4 chart setup. But it better reject it quick. And then from there, we can see here with the candle closing, it did that. It did exactly that. It broke the level, and then it actually held the RDA. So at this point in time, you've kind of got a confirmation, partially, not fully. You've kind of got a confirmation that it's trying to hold the RDA. You have the reaction area, and you have a pattern. It's the same type of pattern. It's on the 5-minute chart. It's an overshoot. You have the lows around the same area. It's coming from a high. And now, really, if you were to trade this, the simple trade is you execute the trade now, and your stop loss is probably here, well below those lows as a protective stop, and then you're targeting this upper level. That's what you would be rolling out, right? That's the type of trade. I mean, obviously you see the momentum indicators here, so you know that there's going to be a reaction there. But as this trade plays out, I think it probably does what we expect. Yeah. So it does what we expect. So that's an example on the 5-minute chart.